Bitcoin outstanding at roughly 19.5, 19.6 million Bitcoin. And 15 million of those are in the hands of what we call strong hands. They're not weak hands, they're strong hands. They haven't moved their Bitcoin in roughly half a year, and we can monitor this. So 15 out of the 19 and a half, and the number of Bitcoin ever that will be created is 21 million units. So again, I think you're going to start to see scarcity value playing a big role here.
Welcome back to Money 101. The forthcoming introduction of spot Bitcoin ETFs in the United States is poised to create unprecedented opportunities for institutional and retail investors alike. These ETFs offer a regulated and more accessible pathway for engagement with the growing Bitcoin market. Analysts anticipate that the approval of these ETFs could trigger a substantial influx of institutional capital into Bitcoin, potentially propelling its value to new record highs and reinforcing its status as a legitimate asset class. The ETFs are expected to debut on major stock exchanges today, Thursday, January 11th, stirring anticipation among investors and Bitcoin enthusiasts about their impact on market dynamics and sentiment. Cathie Wood, CEO of ARK Invest, one of the companies granted ETF approval, expresses her excitement about this milestone, emphasizing its significance beyond Bitcoin itself. She remains optimistic about the SEC's cooperation in this venture. Join her in the video, and as you watch, remember to like, subscribe, and share your comments below.
The price has moved up. It's been an anticipatory move, I think. Many people have been saying there's going to be a sell on the news. This is up too far, too fast. And that very well could be, but I don't think it's going to last very long, because this is the SEC's green light, and there have been institutions waiting on the sidelines. They were not going to move until the SEC blessed this. And we've had a lot of our clients and the gatekeepers were not going to allow Bitcoin, even what we did own, GBTC, they would not allow in portfolios until the SEC blessed it. So I do think this is a big moment, and I do think that the flows are going to help us demonstrate that there's real scarcity value here, because you've got Bitcoin outstanding at roughly 19.5, 19.6 million Bitcoin, and 15 million of those are in the hands of what we call strong hands. They're not weak hands, they're strong hands. They haven't moved their Bitcoin in roughly half a year, and we can monitor this. So 15 out of the 19 and a half, and the number of Bitcoin ever that will be created is 21 million units. So again, I think you're going to start to see scarcity value playing a big role here. A lot of retail holders did not want to go through the friction-filled process, or they were discouraged from it, to get a wallet and figure out custody and all of that. This is going to simplify all of that. It's easy access. And I think a lot of people are waiting for easy access. The early adopters are there, no question about it. And yet we believe this is an asset class that will scale to billions of users. I think in the United States there are 50 million. I don't know, I think the estimates for around the world, 100, 200 million. We think this is an asset that it is the financial superhighway that the internet finally is accommodating. When developers built out the internet in the early 90s, they did not put in this layer because no one ever thought that financial services or commerce would take place on the internet. It was just a place to exchange information. And even in the 80s, it was illegal for consumers to use the internet. So we were coming from there. And now, of course, we do all kinds of things on the internet. This is going to simplify, take out a lot of middlemen that are there really to control risk, but also they take a toll This is much more of a peer-to-peer network. So we think there are going to ultimately be billions of users on this network. One of the most important proof points for Bitcoin happened in 2023. Whereas before, most investors thought it was a risk-on asset. It would do well in strong markets. They never thought it would do well in crisis-prone markets. And of course, in 2022, there was all kinds of crisis, and it didn't do well. But what happened during the regional bank meltdown in March of last year? The regional bank index, the KRE, was imploding. Silicon Valley Bank, Signature, Republic, other banks went bankrupt. Bitcoin went up almost, well, I think it went up 40%, right in the middle. What did that tell us? It tells us we have not only a risk-on asset here, but we also have a risk-off asset. And that spoke volumes to us. In fact, we got converts. Now, leaders of financial institutions call it a flight to quality. We would say a flight to safety. And why do we say that? There's no counterparty risk, unlike in the banking system. The counterparty risk is what caused the 08-09 financial meltdown. Fear of counterparty risk, once again, caused the regional bank crisis. With this fully decentralized, transparent network, there isn't counterparty risk. So we are now saying Bitcoin is not only a hedge against inflation, given its scarcity value, but it is a hedge against deflation, given the lack of counterparty risk. The value of Bitcoin, the first global, digital, decentralized, rules-based monetary system in history, that is a very big idea. When Art Laffer, when we did our research, our first white paper in 2015, could Bitcoin serve the three roles of money? We invited Art Laffer to collaborate with us. He is a famous economist. You probably know him for the Laffer. He's also a monetary scholar. His mentor was Robert Mundell, who won a Nobel Prize for monetary theory. And when he finally figured out what this Bitcoin was, he said to me, I've been waiting for this since they closed the gold window in 1971. A rules-based monetary system. Monetary policy is unhinged right now. This is a rules-based monetary system. I said, wow, that sounds like a very big idea. Remember, this is 2015 when Bitcoin is $250. How big of an idea is this, Art? Well, how big is the monetary base? At that time, it was $4.5 trillion. Now it's $7.7 trillion. This is a very big idea. Right now, Bitcoin's market cap or network value is a little over $800 billion. We think it has miles to go. The scarcity value of institutions pushing in, now that there really only are going to be 1.5 more million Bitcoin minted ever, is going to be quite provocative.
Renowned trader Peter Brandt suggests that the anticipated approval of spot Bitcoin exchange-traded funds, ETFs, may lead to a classic buy the rumor, sell the news scenario. Drawing from his extensive trading experience and the enthusiasm of Bitcoin maximalists, who eagerly await ETF approval, Brandt points to the irony of relying on government intervention in crypto markets. He questions how Bitcoin, valued for its independence from government control, is now seen by some as dependent on the SEC and ETFs for financial salvation. In traditional trading, buy the rumor, sell the news involves purchasing a security based on speculation before an event and selling once the event occurs. Brandt applies this principle to the SEC's expected approval of Bitcoin ETFs, suggesting it could trigger profit-taking. He shares insights from a guide often used by seasoned traders, indicating that when the average person rushes in, experienced traders may consider it a signal to exit. While Brandt acknowledges the potential for error in his observations, he seeks input from those with differing perspectives. Social media responses vary, with some disagreeing and anticipating a positive price impact if multiple ETFs gain approval, while others emphasize the global perspective, where ETF approvals may matter less. Your participation in our journey is not just an investment, it's an invitation to shape our shared future. What are your thoughts on Peter Brandt's analysis? Share your opinions in the comments section and don't forget to like, subscribe, and turn on notifications for more content.